In today's video, I'm going to talk about an interesting scenario that sometimes happens at the end of a trend to signal a reversal. We're also going to see how the Andrews pitchfork can help understanding and making sense of such a scenario. The first thing we want to notice in here is that we have higher highs and higher lows in what appears to be the major flow of this market. Not only that, but there is a bit of a contraction going on between the most important major price vectors. Notice that the second retracement is much quicker, and then price goes back up immediately. That doesn't happen in the first retracement that takes much longer to occur. This sort of thing can sometimes happen at the end of a trend as a final burst of volatility from the dominant player. In this case, this would represent a final burst of volatility from the buyers. We can also notice that fractal bars appear near the reversal points of the market as usual. The place where the buyers made the last attempt to go up represents an important axis in price precisely because of this idea of the final attempt to extend the trend. In other words, we want to watch carefully what happens with price with respect to this low. In the most recent bars, we can see that price spiked this last low a few times, which was not supposed to happen since the last low is a solid low formed by buyers. In other words, the series of spikes represent that something has changed in this market or that buyers are losing strength. This is the sort of thing that is important to pay attention to because that's the kind of detail that allows you to understand the mechanics of how power shifts between market players. That's of paramount importance if you want to have a chance of trading near the reversal points of the market. In other types of market contexts, the spikes in the last confirmed low could represent a market manipulation opportunity. But notice that here we don't have a prominent von Riestorff effect, and we have the scenario where buyers attempted to make a final leg in the trend, as I showed earlier in the video. These two things would contradict the appearance of a market manipulation in this area. The really interesting part of what I wanted to show you relies on the line work that matches this context I have been describing so far. If we connect the last low that has been spiked a few times, which is the final attempt to make an uptrend go higher up to this point, and the low of the spike, we'll get a downsloping angle. A downsloping angle in an apparent uptrend like that is a very controversial thing. It means that there is a chance that this market might be shifting its direction, and this new angle might provide an indication about the precise place where it will do so. The way we will do that is by extrapolating this line to the highest high in the chart in the attempt of projecting the next market edge, which in this case would be the next high. If the presented contextual interpretation is correct, then the market should make a downturn somewhere along the upper line, which angle is given by the lower line. Since individual lines tend to be weak, it's good if we can find other types of lines that agree with the already existent line work and context. For example, if we draw an Andrews pitchfork using the last confirmed low, the highest high in the chart, and the low formed by the spikes, we'll see that the center line of the pitchfork points roughly to an area where the downsloping line, the inward frequency line, and the center line all intersect. Let's advance price to see what happens next. As you can see in here, as soon as price encountered the meeting place of three different types of lines, it immediately reversed. Notice also that beyond the line work, when price reaches that intersection, it creates a fractal bar, which would be a fourth layer of confirmation not only to the line work, but for the market context as well. I hope you can appreciate the fact that beyond the apparent chaos of a price chart, there is a symmetrical reality that can be exploited. If you wish to learn how to analyze the market like that and use more than 30 advanced techniques like the ones you saw here, check out the courses available in the video description. If you enter my website fractalflowpro.com, you'll see the table of contents of each course and also a wall of YouTube verified testimonials from students of my courses. If you enjoyed this video and wish to support the channel, don't forget to click the like button, subscribe to the channel, activate the notifications, share the video with your trading community, and leave your feedback below in the comment section. Thank you for watching, and I hope to see you in the next videos. Take care.